Before we get into it, if you enjoyed these videos, please hit the like and subscribe button, and keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as, investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. All right, folks, here we are on Tuesday, February 25th. We're going to take a look at the overall market today and a few select stocks that I listed in the title of this video. Now, I'm starting to get some of the, I don't know, it feels like a gut instinct that's telling me, things might be getting pretty precarious up here in the near 600s on SPY. And I just wanted to come in and sort of see where things are situated and kind of talk about why I'm feeling this way. But, a couple of things. One, I was like flipping through stocks today and was just really feeling like, oh, a bunch of these stocks that we've been looking at for quite a while are getting very red. And a lot of the stocks that we've seen, QBTS, I'm not saying these are the best stocks or the best companies in the world, but the ones who have had big booms lately, that they are just getting absolutely trounced. And that felt to me like it was kind of picking up steam today. But you see it through a bunch of these tickers. We'll go back through these and take sort of better looks in a few minutes. But that scrolling had me kind of curious. I came in here and looked at SPY. It is situated really close to this 587 level that we've had on the chart. These levels have been holding up really well. Obviously, it hasn't yet pushed toward this 646. So we do have this huge percentage gap in here. And we could certainly rejigger these levels a little bit. I'm a little hesitant to at the moment in case things get dippy. It's nice to have a lot of levels below. If it starts to recover, consolidate, seemingly stabilize, then yeah, we can rejigger this a bit and get more levels into this range. But if we take a look at a few sort of key news items here, the Buffett indicator, you can Google that if you're unfamiliar with it, but the Buffett indicator is right now at a strongly overvalued marker for the overall market. Berkshire Hathaway CEO, billionaire investor Warren Buffett sounded the alarm for Wall Street as his company sold a record $134 billion of net stock last year, a move that's raised concerns for investors and analysts as per a report. Historically, when Buffett's firm becomes a net seller, it's often followed by below average market performance, and many experts believe this could be a sign of what's to come for the stock market in 2025. Another person, Steve Cohen. If you don't know who this person is, you should give him a Google. You'll see sort of the bona fides there. Steve Cohen warned of slower U.S. economic growth and a significant correction in the markets. The billionaire investor cited tariffs, less immigration, and cuts to government spending. Cohen said that after a stellar run, the best gains for investors may be behind them. So, a bunch of prominent folks sounding the alarm, and like I said, things seemingly getting very dippy in some of the more speculative stocks, and we have just seen this play out so many times in the past. Let me show you something we haven't seen play out so many times in the past. Flipping over here to the Think or Swim study, this is SPX, the S&P 500 index. What do you notice down here? TTM squeeze indicator. This is a year, right? This is back to a year ago, February 25th, 2024. And so over this year span, the TTM squeeze indicator never triggered. Through this whole run from down here in the 4,900, so below 5,000, all the way up to 6,100, it did not trigger a peep through all this big bump, and then this big pullback, and then this bump, and this pullback, this bump, this pullback. None of those were preceded by a trigger on the TTM squeeze indicator. Now, you could say, hey, well then maybe the TTM squeeze indicator is bogus for this. I would say maybe the TTM squeeze indicator is bogus a lot of times. But when I see something like this, it stands out to me because now we're getting a pullback. We're getting a pullback through the channel, right? It was up in the channel here in January, tested the mid-range, and now has seemingly lost the mid-range, testing the lower bound of the channel, situating itself at or slightly below the put trigger for January. That has a -1 ATR down to 57.29. Or sorry, for February, not for January, for February. Now, there's only a few days left. I don't know that it would get there, think that it would get there necessarily in the month of February, but those are just extended for March, right? So for March, it has a -1 right now of 56.48. And today we got the first fire candle on the TTM squeeze indicator. So the degree to which the TTM squeeze indicator is looking for consolidation periods preceding an outsized move. Just keep in mind, outsized move can come as a big boom to the upside. It can come as a big rug pull to the downside. It's just looking for what's preceding a big outsized move. So are we sort of on the precipice of a big outsized move? Maybe, as this does not happen very often, certainly not in the past year, and that's potentially pretty interesting to me. Like I said, those are the levels. If it does get really dippy, we have levels down here about 58, 48, and then down here, as I said, to 57.29. If it recovers, you have levels up here, 61.14, 63.52, so on and so forth. But obviously at the moment, as it's triggering, and then on this first fire candle, it had a nice wick up off of the channel, but it is sort of net negative at the moment, and all of this bullish momentum that it had accumulated during has seemingly died off. Now, could it resurge? For sure. There must be an example of, here's an example, right? Boomed, slow, steady die off, brief dip, and then just a resurgence. So could that happen? For sure. But this did stand out to me as potentially saying, hey, something different might be happening here. Now, I'm going to take away the levels for the moment because I want to put the EMAs up here and just see where things are situated EMAs wise on the chart. SPY, the 183, which is what I would look for if things got really dippy, right? You see down here, things took a turn for the worse from like 560 down to 507. That's where it found support. Prior to that, dipped just below on this fairly sort of dual downturn here. And, when we've had bigger course corrections back here, 2022, and it peeled off from 459 down to 337, it had flipped that pretty obviously to resistance and then recaptured it and then started again. So the 183, when things do have an outsized reaction, is pretty imperative to my mind. That right now is situated about 570. So if that comes into play, just keep in mind that it's dynamic because it's an EMA. You could easily pull this up on, it should be on most or any charting software. You use the ability to put it in EMA and just put a value of 183. You can see where it moves. But if we get a big peel back, that might be a spot to look for potentially some relief. But you do see here the short-term EMAs. Not to say this is the be-all, end-all, but as of today, the 8 crossed below the 21. We did see that back here as well. Right, we had fully bearish formation here, right when it recovered. But the question becomes on sort of a situation like that, where this old Twitter handle that I used to follow, was always looking for dead cat bounces. Not to say SPY is a dead cat, but, was this just sort of like, I'm going to bounce before I give the real correction, right? Fake correction. Fake bounce, real correction, maybe. If we look up here at some of the big folks, Apple holding up pretty nicely. It did recently bounce off of it. It's 183. So that's actually, looks a little bit counter to a bunch of these other stocks that we see. Obviously some of them have been on an uptick, but you see the strong peel off, right? You don't see that with Apple. It's still sort of like relatively lackadaisically at the moment, kind of trying to continue to stretch. Netflix peeling back, quite sharply. Meta threatening a crossover here. Microsoft way down here under the 183 EMA. So that's already in a fully bearish formation at the moment. all of these short-term EMAs in a bearish formation. Price and the EMAs are below the long-term 183. NVIDIA getting a little bit of a wick up today off of the 183 range, but it's looking like that, and so it has recovered nicely previously from that 183, but we see the recent push through, recovered, put in a lower high, and now it's retesting it again. So what does that look like? QQQ, right? It's going to look similar-ish to SPY, of course. Tesla, I mean, this was down almost 8.5% today. Fully bearish formation on the short-term EMAs, trying to catch some support at the moment, wrestling with that 183 EMA. You see how it's moved off of there previously. When it's peeled back, right? Big downturn here, recovered it, and bang, boomed right off of it. Here's when it lost it previously, right? Tried to push through a few times. Support, lost it a little bit, really lost it. That's what makes me wonder about NVIDIA, right? Support, where do we have? Support, lost it a little bit, and now is it really going to lose it? I don't know. But Tesla, in an interesting spot there. HIMS, we won't worry about because we know what happened with earnings. NEO, I know people, are going to say it's a trash stock anyway, but, it's peeling off of its recent consolidation. SoFi, something we've tracked for a very long time. Well, since it was IPOE, its movement off of the 183, and it looks like it's on a collision course at the moment. I don't know. It's coming down. It's put in a lower low today than this 1360 was the low on this day. I thought maybe we get double bottom sort of energy there, but it put in 1342 today. So it's putting in lower lows there. That is situated at 1213. What else is of interest there? I mean, in terms of quantum stocks, QBTS, right? It had this big boom. We've seen this so many times, right? This is why I'm saying, are these canaries in the coal mine? With these big boom stocks, and then just they get absolutely clobbered first, and then they get clobbered worst. First and worse. WULF, I mean, look at this disaster. I mean, absolutely such a mess. 930 in November. We're at the end of February. And it's in the $3. ACHR, big boomer, 2 to 12, and now seemingly racing down toward the 183. Lucid had a nice push off of below twos here, and getting sort of taken to task for it now. Riot, full nose down mode. Same thing with CleanSpark, BBAI, right? All of these boom to bubble. Palantir, it's nearly filled this gap now, right? The gap fill here is at 84.25. It's come down today to 85.25, so it's within $1 of filling that gap to the downside after some folks are buying it up here in the 120s. I mean, charge point, we don't give that too much credence. RGTI, this is what I was looking for. RGTI, right? Big boomer, right? Big early charge with the quantum stuff. 66 cents back here in September. Folks were buying it in the 20s by the new year. And now it's back to less than half of that. Rocket Lab, I mean, yeah, these charts are just nosedive charts for these more speculative stocks, which, like I said, question here is, are these canaries in the coal mine? Do they get then just the brunt of the clobber as the clobber comes in? I didn't even look at these, but yeah, I mean, look, GSAT down here, MBOT we looked at previously. Yeah, any of these booms, boom up here, cut it in half. AMD, not a wimpy stock, but there it is. I don't know if there's anything else on here so if you want me to do a deep dive or, a solo video, I should say, on any of these stocks individually, please put that in the comments. But the purpose here was to just say, as I was scrolling through looking for a stock to cover today, I was like, wait a minute, this looks a little different than normal. I wonder if something's starting to not percolate, not brew, but something's really sort of starting to kick off. Right? Is this the kickoff? I don't know. We'll see. Thinking back to the days of every futures market would limit up, and then the next day would limit down, and then would limit back up, and then would limit back down. I don't know that we'll get to that craziness, but obviously, if the market is just generally overvalued and wants to correct anyway, the danger that I see there, the thing that has my antenna up, are all of the macro/global factors that could really ignite like a keg powder, a powder of keg, a keg of powder, whatever. That could really be an explosive combo. If you have the market correcting anyway, and then some sort of net negative macro factor comes in, then things might get very interesting. But for the time being, even just the charts alone caught my eye. Take out of the picture any of the macro stuff, but I don't know if anything will come to fruition there, but even just the prospect of it seems like there are several possibilities that could come in to be seen as too chaotic, too net negative for investors, and sort of wide-scale pullout commences. But we'll see. Obviously be cautious out there. You see order flow on SPY here. Doesn't necessarily dictate the world, but a lot coming out here in QQQ. I don't think we get it. No, we don't get it for SPX. But Tesla getting piled into, apparently. Yeah, I don't know. That's why, to me, the charts look one way. Order flow can look a little wacky. We've seen that plenty of times in the past. But for my money, I'm more interested in looking at the chart here and seeing what that looks like. So, all right, folks. So I hope that your trading week is off to a good start. And as always, I appreciate you watching, and I will see you in the next video.